Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, more than $1 billion worth of Philippine exports bound for the U.S. will be exempt from 19% tariffs. President Trump's reciprocal tariff exemptions include key food products such as coffee, cocoa, bananas, tomatoes, and beef. One of the world's largest global communications groups, Havas, sees the Philippines as a regional and creative innovation hub. We speak with Havas Asia CEO Rana Barua, Group CEO of Havas India, Southeast Asia, and North Asia. And navigating risk in a time of waning consumer confidence. What next for Philippine equity strategy? Kyle Garcia, equity research analyst of First Metro Securities, joins us live. More than $1 billion of Philippine agricultural products will be exempted from the 19% tariff to the U.S. That is the news that came out of a press conference held yesterday by DTI Secretary Cristina Roque, incoming Finance Secretary Frederick Go, and Board of Investments Vice Chair Seferino Peri Rodolfo. The list includes key produce, including coconuts, mangoes, bananas, and pineapples. These are all products that the Trump administration has acknowledged can't be produced easily in large quantities in the U.S. Other items to be exempted include fruit juices, frozen tuna fillets, and confectionery products. This comes after 4 months of extended negotiations between the U.S. and the Philippines. President Trump announced the 19% tariff in July when President Marcos visited him at the White House.
Based on the United States data, the exempted agricultural products amount to over $1 billion, or $1.03 billion. So it's a very significant export.
These industries sustains thousands of Filipino farmers, MSMEs, and rural workers, and this decision offers not only immediate relief, but also renewed confidence and stability.
The Philippines was excluded in October from ASEAN countries that got zero tariffs, including Cambodia and Malaysia. But Rodolfo says the administration just exhibited patience.
We felt that we just really have to be patient and constantly engage the U.S. in terms of what are our products of interest, as well as what are the sectors that we needed to really protect. So, talagang patience lang ho ang ginawa natin, as well as convincing the U.S. that these products are anyway not produced in the U.S.
The exemptions were announced just a day after incoming Executive Secretary Ralph Recto admitted that the economy is now on a slower growth path. He said the economy should grow between 4.7 and 4.8%, well below their original target of 5.5 to 6.5%. Outgoing Finance Secretary Ralph Recto also says the country will not reach its growth target for 2026. Recto told reporters the economy will grow anywhere between 5 and 6% next year. That's lower than the target set in June by the Development Budget Coordinating Council of 6 to 7%. The DBCC will review all economic targets from 2026 to 2030, including revenue collection projections. Key to improving the year-end growth rate, says Recto, is demonstrating accountability and transparency. Senate President Pro Tempore Ping Lacson confirms there was a 100 billion peso insertion in the 2025 national budget, but insists President Bongbong Marcos had nothing to do with it. Former Congressman Zaldico earlier claimed the president ordered the allocation during BICAM deliberations. Lacson said their review verified the insertion, but stressed the funds did not go to the president. He added it's more likely that someone used Marcos's name to make it seem the order came from him.
Yung gusto kasi ng iba, paniwalaan natin na sa Pangulo ang nag-utos mag-insert. But it doesn't make sense to me, Mr. President. Common sense. Siya nag-utos, ibibito niya. May mga tao sa Malacanang, not authorized by the President, who misrepresented him.
Lacson adds information from former DPWH Undersecretary Roberto Bernardo's camp pointed to some Malacanang personnel who allegedly invoked the president's name in dealings with lawmakers. He identified former PLLO and Education Undersecretaries Adrian Bersamin and Targ Olive as those who created that impression. Bernardo tagged Olivar as the point person in meetings in unprogrammed funds.
Ang sabi niya, naghatid ako ng pera as kickback, but not to the president, but to Yusek Olivar. And sabi niya, ang pag-alam niya, kasama si Yusek Adrian Bersamin. 8 billion pesos, Mr. President, in at least 10 deliveries. Yung arrangement nila is, may tigisa silang armor ban. May armor ban si Yusek Olivar, may armor ban siya, darating yung ban driven by Olivar, and possibly, sabi niya, hindi siya sigurado, and possibly along with Adrian Bersamin. Bakante yung armor ban, ipapark, idadrab yung isang ban na puno ng pera.
For his part, Ombudsman Boyeng Rimulya said Bernardo's revelations did not surprise him.
I had my suspicions already before about the activities of Undersecretary Adrian Bersamin. He was already in my radar for a long time, and it's Tri-Give that I just got to learn about later on. Tri-Give Olivar, and of course about the involvement of Bina Pangandaman.
Kung papailan siya ng kaso, ano yung magiging kaso against him?
Well, actually, ang unang supposition ko rito is a conspiracy. Conspiracy to commit plunder. It could have been malversation, but right now it's evident. It looks like a conspiracy to commit plunder.
One of the world's largest global communications groups, Havas, sees the Philippines as one of Asia's high-potential markets, serving as a regional and creative innovation hub. Havas is a French multinational advertising and public relations firm operating in more than 100 countries, including the Philippines. With us now for more is Rana Barua, the Group CEO of Havas India, Southeast Asia, and North Asia. Good to see you, Rana, and welcome back to Manila.
Thank you very much.
All right, so you're seeing the Philippines as a potential for being a regional hub for the creative and innovation industries.
It's true.
Why the Philippines?
Yeah, because I think, Philippines has been, I keep saying it's been very, very productive over the last few years. It's got a phenomenal growth story, at least that's what we've seen in the world of advertising, media, communications. What is also very interesting is that, it's like a proper mix of, it's culturally very, very rich in its tradition and its behavior. And what we are discovering also is that, the language is predominantly, English. So it makes it easier for the communication industry to, kind of start setting up the center of excellences and conversation points. And, over the years, we've seen that the digital adoption has been phenomenal. So the more you progress, when I look at Asia as a whole, and I keep saying one Asia as a story everywhere, that, there are many countries around Asia, but then there are one or two which stand out. And for me, Philippines seems to be a well secret, and I need to, really work closely with the team here to make it happen larger.
Well,
so
the Trade Secretary, when I spoke with her earlier this year, made a mention of the creatives industry as one of those with high potential. But then you're coming at a time when governance issues are hounding the community, the government, with people taking to the streets to demand accountability, transparency, and restitution. In what way might that hamper your view, your positive view of the Philippines?
So, in fact, what we've seen, and it's becoming unanimous across the world, right? So it's like, most of the countries that we are working on have some challenges or the other. But I don't think that bothers the industry where media and communication is, as long as we are very clear of our responsibility and why we are here. We are here to look after consumers and brands. And as long as we are right and we are, being clear about our messaging and our job profile, I keep telling all my counterparts, and it's also a global philosophy. We keep into our lines. We are here for our clients, and we are here for the consumers. So I don't think that bothers us a lot. And if there are certain decision making that starts impacting the governance, that's different. Then you have to abide by what the country laws say, or what, because when I look at various countries, they have various strictures and laws that are coming through. And we have to abide by that. We don't necessarily take any challenges on that.
But when you got an economy that's slowing,
Sure.
and we've seen it slow to a low we hadn't seen since 2011,
Sure.
minus the pandemic years at 4%, because of those chief governance concerns, how then would you communicate that to the brands and also the consumers that have already stopped spending because of the lack of trust?
Yeah, so I think, I think there are two questions here. One is naturally what is happening in reality. But what you would find, Cathy, is that the clients and the marketers will keep doing their work. They will always ensure that the brands are spending money. They may have what we call as ups and downs in terms of the cycle of spends. But I was asking this time how's the Christmas pre-Christmas is going on. I was asking with the team, and people said that last weekend apparently it was quite crowded in most of the malls and everywhere. So you may find it in relevance a bit slower, but it's a cycle. It's going to probably come back. And of course, it's linked to what's happening around you. But you would see that, again, when the season changes, people will be back on the streets and the malls, and the brands will be spending again.
So it is a cycle.
Always.
What then does that mean for jobs in terms of, because you're growing here in the Philippines and hoping to turn it into a regional hub,
Yeah.
what then would that mean for 2026?
Sure. We are looking, at least from our network side, I think we are looking for a decent expansion plan. And I think the brief to the local management, which is run very aptly by my friend Havas, who runs Philippines, is that we need to look at more expansion plans. We need to expand because, like I said, that the potential is huge. And when I see the neighboring countries and all, I definitely see Philippines playing a much larger role in the region and for the global ecosystem of Havas. So I do see more jobs happening for us. I see more expansion plans. I'm definitely looking for certain mergers and acquisitions. The market is absolutely right for that. Smart entrepreneurs, smart business people. I've met most of them here. I'm hoping to meet many more. You're going to probably see me many more times in this country. It's exciting times, at least from my perspective.
So a percentage increase in jobs versus ASEAN, how are we looking at if we're going to be
Better
the hub?
here. Much better here. Much better here. The percentage is definitely better here. It's like, if you see India, we are always looking out for jobs. Whether it's, even if there's AI, even if there are challenges, we know that jobs are going to happen because there are just so much more we can do in this industry. So I think Philippines is going to see a growth from our side.
All right, we got about a minute. Your fearless forecast for 2026
I
for
think,
the creative and innovation industry.
So very, very aggressively optimistic. Whatever the world says, I think, I keep saying that our business is about ideas. Let's not get carried away with what's happening around us. People keep saying that AI is here, doomsday is here, and all. I keep saying AI is a catalyst, facilitator. It's good for growth. It's good for, must adopt it. Please don't shy away from it. We are going through all our classes at our ages and senior levels. We are understanding how best to use it. But I see storytelling, I see idea generation, I see consumers and brands only spending more because, this is a marketing industry. And, I definitely feel that the more we invest our time in understanding consumers and brands, it's only going to be better for us. So you can call me an eternal optimist, but it's always been like that for me. And I think that's the only way to look at overall industry and life.
All right, well, I look forward to your coming back to Manila
Absolutely.
more often, as you say. Thank you so much.
Thank you so much, Cathy.
Rana,
Thank you very
appreciate
much.
it.
Thank you.
Rana Barua, the CEO of Havas India, Southeast Asia, and North Asia. And you're watching Money Talks. Coming up, BSP Governor Eli Remolona said a policy rates reduction is possible in December. And we speak with Kyle Garcia on how the new tariff exemptions can affect the local markets. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. US stocks fell for the fourth straight session yesterday, Tuesday, as high-flying tech stocks like NVIDIA came under pressure. The Nasdaq tumbled by nearly 1.25%. The Dow slid by over 1%, and the S&P 500 down 0.8%. The risk-off mood caused the benchmark 10-year Treasury yields to settle at 4.12%. Gold prices fell to $4,061 per ounce. U.S. futures are moving marginally in after-hours trading, the Dow rising less than 0.1%, the Nasdaq falling 0.2%, and the S&P 500 by about 0.1%. Asian markets are looking like a mixed bag in the first hour of trading, with Australia's ASX 200 and Japan's Nikkei 225 up by 0.1% each, and South Korea's Kospi falling by 1%. Now let's take a look at our own markets, see how the PSCI is doing at the start of trade. It is slightly lower at about 57.56. The stock market slipped yesterday, Tuesday, by nearly 0.4% on the back of profit-taking. The broader all-shares index tumbled by 1.5%, with local counters a mixed bag. As for the Philippine peso, it opens today a tad stronger, 58.95 to the dollar. The peso closed yesterday at 58.985 against the greenback as traders await the delayed U.S. economic releases for direction on the Fed's policy path. The 10-year government bond yields ticked up to 5.924%. And the Bangko Sentral ng Pilipinas could cut policy rates again during its December meeting. BSP Governor Eli Remolona says a reduction is possible, but clarified it would likely be another baby step, or by 25 basis points. The central bank already delivered a similar cut in October, bringing the policy rate to an over 3-year low of 4.75%. The economic outlook and investor sentiment weakened amid the flood control scandal. The BSP has so far lowered borrowing costs by a total of 175 basis points since it began its easing cycle in August 2024. Another cut on December 11 would mark the 5th consecutive reduction since April. Well, joining us this morning is Kyle Garcia, Equity Research Analyst at First Metro Securities. Good having you back on, Kyle. Welcome to the program.
Thanks for having First Metro again.
Oh, yeah.
It's always
and
a welcome here.
We're back again talking tariffs after a spate of local governance issues impacting markets. Is that going to move the needle, about $1 billion worth of exemptions?
Yes, I think it's a good step in the right direction, although it is limited to commodities mainly. Probably what we want to see as next steps is if we can move that to manufactured goods, high-value goods, which can definitely move the needle further.
But they're exempted right now, aren't they? I mean, if you talk about semiconductors.
Yes, that's a key export from us. But I think some of the tariffs that were also exempted were some like cocoa or some key commodities also. So like to see high-value goods potentially. Yeah.
All right. Well, I'm looking at the PSCI. It's just a tad stronger, barely moved, but the peso has also strengthened a little bit. Do you think it's in reaction to that?
Well, it's a bit lower, but I think there are a lot of moving parts that's bringing sentiment down right now. I think we need a big catalyst to move us forward in the right direction with growth prospects in the near term as well as in the longer term being not as optimistic as the ones before. We need to see some clear signs of policy recovery as well as higher earnings growth for our companies here to drive the market further.
Yeah, you know, I was looking back at your PSE target since the start of the year. It was at 7.6.
Yes.
I think you were one of the most optimistic, and that came down to about 6.9 in mid-May, and now you're maintaining it at 6,500.
We're under the process of finalizing our call for next year. But what I can tell you is that we're pricing it a slightly lower target actually, because of we think that sentiment will likely be a little bit tempered, especially as 3Q was quite slow, and we think that the sentiment in the second half of this year will likely roll over by next year, and hopefully by the latter half of the year, we see some improvements in policy direction as well as governance, which could drive us further and see liquidity flow back into the economy.
So between geopolitical concerns and the local governance issues that we face, which one do you think is the bigger risk? Because we came all the way from 7.6 down to sub 6,000.
Well, there's a lot of moving parts again. So most of this is, aside from the governance risks, if you look at lower spending trickle down to consumption, if we saw infrastructure spending was actually lower by almost 26% in the third quarter. And of course, the lower liquidity will flow into lower consumption and then flow with slower growth. So I think it's a connection between both. And aside from these, there are some pressures also in the job sector. So we think that these are driving growth forecasts lower, which is expanding the equity risk premium or our valuations for the market even further.
So would you still get into infra-related stocks? Because prior to the flood control scam, it was one sector that you were propositioning to your clients.
Well, that is what we are hoping for, that when as this is a step in the right direction, right? When you uproot the problems, this is a crisis, but crises can be solved. So what we're hoping for is that when these problems have already been showcased or highlighted, how do we fix this and how do we lessen the corruption here in the Philippines and how do we improve jobs as well as bring back infrastructure spending, which is of course a good entrance to the stock or the one of our key calls, which is mega wide.
So you would get in now. That's what you're recommending, to get in and wait for that bump up.
Well, yeah, I think what we're seeing right now is it's a good opportunity to get in with levels already quite at depressed levels. If you're specifically at M-wide, we think that there's a lot of value moving forward, especially as the company plans to expand its project portfolio and revenue base moving forward. Now, I think the key there is the acquisition of projects which will expand their portfolio.
What about for property? Because at the start of this year, we troubled ourselves with POGOs and BPOs and the drop in condominium prices. Has that all been worked off right now? And would you recommend getting into property and potentially REITs? And be more nuanced, of course, when it comes to REITs.
Well, you have to break down property into three segments, right? The residential, the office, and the malls. What we like actually right now is the mall side, as we're still seeing some pressure on the office side as well as on the residential side. So with that in mind, what we like is probably SMPH, which we saw rebound almost 10% from its lows, right? Potentially on bargain hunting or value hunting also. So we want to focus on recurring cash flow, which are the malls.
The speculatives. I mean, we've had a lot of movement with gold-linked stocks, and maybe even the gaming sector.
Yeah.
Bit of a dip there and a recovery. What's going on, and would you recommend any counters there?
Well, we definitely prefer mining right now, as with they're both beneficiaries. Of course, you've seen gold prices rise, but they're also a key hedge on a depreciating peso, right? So we think that there is still some upside for commodities, especially on the metals. So actually, but they have recovered quite fast already. But we think that potentially they're a buy on dips. And then on the gaming side, we saw 3Q numbers quite weak. And we haven't seen any signs of recovery yet. So we're a bit not as optimistic on that sector yet. But hopefully, as tourism rebounds or as the economy gets better, we could see some rebound. But there is no clear sign yet that it's a good entry point.
Speaking of catalysts, and we got about a minute, the Bangko Sentral just said baby step. So that to us means 25 bips.
Yeah.
But what can we expect, and how do you think that might affect risk appetites?
Well, our DBS team is also pricing in 25 basis point cut in December. But actually what we want to look at is another policy direction, which is the reduction in RRR. Because there are some pressures that limit the BSP movement. With RRR, we're seeing a bit of a weakness in liquidity, so this could alleviate that pressure also. But in terms of sentiment, it's really that growth that we're looking at. So there are some policy leeways for the BSP, which could stimulate that growth and could help stocks moving forward, especially for rate-sensitive counters.
Just very quickly, rumors of an off-cycle cut. Is that happening or not?
Well, we're still on the end that there will be a December cut. not an off-cycle
All
cut.
right, so that would be December 11th then. Well, thank you
Yes.
so much.
Thank you for having
Kyle.
us.
Kyle Garcia, First Metro Securities. And in corporate news, Prime Infra has just announced new leaders for Manila Water and Prime Corgen. Manila Water COO for International Business, Roberto Jose Locsin, will become president and CEO on January 1st of 2026. He will replace Jose Victor Emanuel de Dios, who will retire from the role and take over as president and CEO of Prime Corgen. Before joining the company, Locsin served as CEO of Philippine Growth Terminals under Global Ports Operator ICTSI. Meanwhile, De Dios previously served as Energy Undersecretary under former President Gloria Macapagal Arroyo. And before we go, here is something that might make your next purchase easier. Google Pay is now available in the Philippines. The mobile payment platform launched through a collaboration with Visa and FinTech Alliance PH. This means Visa cardholders can now add their debit or credit cards to Google Wallet and make transactions using Google Pay. Users can now make contactless payments using their Android devices, as well as check out through in-app and online purchases. The service is available through 7 partner issuers: China Bank, East West, GoTime, Maya, RCBC, Union Bank, and Wise. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Kapatid, we are One News, all sides, all the time. Have a great day ahead.